So shortly expecting the ECB Bond Settlements for the week as well.
Good morning, good morning. Hope everyone has had a good week so far. We're just going to get this started up in just a moment here. And be sure to share the link to the stream with folks. I've got it posted on my Twitter. That way more people can tune in. We can have some fun here. All right, everyone. Good morning, and welcome to the stream. Really appreciate everyone tuning in. I think we'll have some fun here. We're going to talk mostly about how I use Bookmap for trading, and we're going to look at some of the flows that are happening in the market as we get ready to start our trading day this Tuesday, May 21st. And we're just going to get through a quick disclaimer, and then we'll be good to go. And I'm just kind of getting everything set up on my end in terms of all the chat so I can interact with you all. So we should be in pretty good shape there. All right. Yep, got everything on screen. So welcome to Back to the Futures with me, Markets and Mayhem from TraderAid.com. We like to have fun with this stream. We like to educate with this stream. There are always questions welcome on this stream. So let's get through this disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. With that out of the way, let's just talk a little bit about me and then we'll get right into Bookmap. So my real trading journey began in 2005, funding my own account and trading stocks, then moving on to options, futures, and Forex. I navigated through the great financial crisis, which helped me to better appreciate the importance of understanding intermarket dynamics, momentum, and of course, macro. Macro was a big driver of markets then. It's a big driver of markets now, just over longer time frames. And my own approach is systematic, driven by momentum, price action, options flows, volume profile, and of course, that big picture, that macro. I like to say, when macro and momentum agree, we find long-term opportunities, right? I began working with Bookmap in early 2022 because I saw the great value in the way their platform displays market data, including the Heatmap, Icebergs, stops, and more. And I've been using it more and more. I've actually gotten to the point now where I've built my own add-on, and I'll be building a series of other add-ons for Bookmap as well. My main add-on, the one that I've put out into the public on the Bookmap marketplace, is called the Advanced SPX Options Visualizer, and it demonstrates how options positioning and flows may impact market price discovery. And we'll get into that a little bit more as we get into Bookmap. Now, just before we get into Bookmap, I want to tell you all how to follow my work. If you're interested, you can follow me on Twitter and YouTube. The name is the same, Mayhem 4 Markets. That's Mayhem number 4 Markets. You can also use that to follow me on Twitch. My trading ideas, coaching, and unique market tools can be found at TraderAid.com. And for a limited time, you can use the code Mayhem20, that's Mayhem20, for 20% off your first month or quarter of TraderAid. You can also get up to 40% off of Bookmap by visiting TraderAid.com/Bookmap. Scroll down to the specials. We've got some great offers there. And as I mentioned, my advanced SPX options visualizer that I built for Bookmap is now available. Visit TraderAid.com/SPX to learn more. My long-term trading and investment ideas, research, and institutional consulting services are available at macrovisor.com, and I live stream regularly, including for Bookmap every Tuesday at 9 a.m. So be sure to join me every week. We'll have a lot of fun, I promise. All right, so let's dive in to Bookmap itself, right? We've got the S&P 500 E-mini futures contract on screen. So the first thing I want to do before we get in, because I know we have people joining up, if anyone has any questions, I'm happy to lead with those. You know, what is this that I'm seeing on my screen? What does this mean? We've got a lot of folks that tune in that, you know, don't necessarily understand all of what they're seeing. So I'm going to go through some layers of explaining what you see on screen, but I'm also more than happy to pause and entertain any questions that you viewers have, because I want to make sure you get the most value out of what I'm showing. And I have my own way of kind of looking at this. I've got my own configuration that I fine-tuned so that when I glance over at my Bookmap, I get a better idea of what I'm seeing on screen. So if you buy Bookmap and you get it set up, you're going to see it looks a little different than mine, which is one reason I'm always happy to show people kind of how I fine-tune my configuration as well. We'll go through some of that today as well. So no questions yet, which is fine. We'll go right through, start talking about what you're seeing on screen. And we're going to focus on using the S&P 500 futures contract for that, because it kind of brings together some of my favorite components of Bookmap. So right now, you can see that we've got just about the last half hour of this contract up. And we're using about a 20-point trading range to show, you know, sort of where liquidity is. Now, one of the nice things about this system is you can basically dynamically pull this out. You can zoom out. You can see where all the options positioning is, right? And where yesterday's flows were, which will be updated today after the market open. This is from my advanced SPX options visualizer tool. This is on the very right side. So we're going to go from the far right and work our way in, just explaining what you're seeing on your screen so you all can gain some additional value. This advanced SPX options visualizer goes through the CBOE, where there's about 10,000 different contracts for the S&P 500 index over various strikes and expirations. It analyzes them all, updating it every minute during regular trading hours to show these levels. And these levels are important because often is the case you're going to see price interact, right? So this call wall is equivalent to SPX 5400. Now, why do you see it over here at ES 5422? Because we're adjusting for ES levels from SPX. We're actually doing that delta math every night on the settlement so that these levels are adjusted to what you could expect the impact to be on ES from SPX, because we know the two don't necessarily trade at the same level, right? So this is an important part of kind of understanding the nuance here, that you're seeing SPX index options levels, but they're translated to ES, right? And then we've got the Gamma 4 levels, the Gamma 3 levels. These are some of the largest areas of Gamma positioning, in order. So Gamma 1 would be like the second largest. The reason it's not the first largest is you do have the vol flip level being the first largest. That's this level right here. So that's the largest level of Gamma exposure. This is going to be the third largest, the fifth largest. And we track all of these because we can see that price tends to interact with these levels as market participants and options market makers adjust positioning when these key levels are being hit. We can also see that yesterday during the trading day, we had this midpoint drawn. And we're going to talk about what the hot and warm call and puts are and this midpoint now, right? So when we look at flows, this is separate from positioning, right? When we look at the flows in the market in terms of SPX options, the most active call, I label the hot call and I show the volume by it. And this is updated every minute. Similar with the hot put, I show the most active put and the volume. And then you may see an asterisk or a plus. The asterisk is showing you that that hot put is the most active put. It's the most active option on the entire SPX options contract, and puts are more active than calls overall. That's what the asterisk means. If you see a plus, it means that contract is the most active contract, but the other side of the chain is more active. So if there was a plus by this, it would mean that hot put is the most active option, but that calls are still leading in terms of total transactional activity versus puts. And we can see that with the put-call ratio intraday as well. So this gives us a sense as to where the flows are. Now, these flows were relatively in balance with each other. That's why I draw the midpoint, okay? When they're plus minus 20% from each other, the midpoint kind of tells you this is more of an options auction that is in balance. And in those situations, you generally gravitate towards the midpoint or the point of control. Now, going back to positioning, this vol flip level, this is the largest level of gamma exposure below us. This is calculated every minute. If you push below that vol flip level, you're getting into negative gamma territory, and that's where you start to see the potential for volatility to actually increase, okay? So this is something that we calculate with a naive model that assumes all options on SPX are bought to open, which is generally accurate. It comes pretty darn close to the much more sophisticated models from Goldman and Bank of America, etc., as insofar as where it calculates those gamma flips. And then we can see as we start to work our way leftward, because I said I'd start on the right and we'd work our way left. Now we have the session range volume profile and the point of control. Now, why is this important? Because this is showing you the transactional activity that has happened since we're tracking the session. This is from the overnight session, okay? It'll reset at the cash open. So this is important if you're trading the market pre-cash open, because it shows you where these areas of interest have been and where there's been some aggression, right? So on the buy side, there was an excess of 450 contracts bought just around this 53.34 level. Why is that important? Because if we see price get meaningfully below there, that would put all those contracts off sides if we're assuming they're bought to open, and many are. just like these sellers got pretty aggressive below that strike. So if price begins to move meaningfully above it, they're offsides. Why does that matter? Why does being offsides matter? Well, if you can imagine being in that position, the further away you get from being at that level where you added your position, the more you're likely to either be stopped out or close out otherwise to preserve capital. Right? So that offsides positioning matters quite a bit. And that's why the session volume profile, which is showing deltas, is important to me, particularly during the cash session, because we get a sense as to where there's interest, but also where either buyers or sellers may be increasingly tempted to stop out of their positions if they get more offsides. Now let's talk about the current order book. All these in red are offers over spot price. All these in green are bids below spot price. And you can see how this also colors the heat map, right? So what you're seeing in the cumulative order book is effectively the same as what you're seeing in the heat map from this white line, which is the present, over to the right. Why is that important? Because it gives you another way to get a sense as to where there's interest, right? So you can see it both in the current order book, but in the heat map as well. So for example, the largest area of bidding interest below us is just here around 53.11 with about 371 contracts. And above us, we've got this 254 contracts at 53.40. Now, where are these white labels coming from? This is from a built-in function in Bookmap. It's actually an add-on that's free that allows you to label these. And we're going to go through some of my configuration after we talk about what all you're seeing on the screen. So you could try to make your Bookmap look a little bit more like mine, okay? And we have some questions coming in. I will be sure to answer them, but I'm going to go through some of these different areas of what we're viewing. And then we'll go through these questions here. So we can talk about the current heat map, right? But what's this on the left side of this white line? That's the prior heat map, okay? So that's important just to take into consideration that this is where liquidity is at the present. This is where it was prior, okay? So it can give you a sense, like if we're about to run into a major event, let's say CPI is about to come out, you'll often see this liquidity disappear. And then it's helpful to know where liquidity was and where it is at the present, so you can get a sense as if things are going to get a little bit more volatile, if there's going to be some more erratic price discovery. It kind of gives you a sense of the market is anticipating something, and so folks are stepping out of the way when that heat map disappears in the present versus where it was in the past. Another quick way to get a sense as to the depth of liquidity on the heat map is looking at these labels here, right? So this is another add-on, and we'll go through these settings in not too long, but this is an add-on that shows you where liquidity is. These are all the offers overhead. These are all the bids below. This shows you an excess 2.6 thousand contracts, bids exceeding offers, right? And then you can see where we were prior. 25,000 on offer, 29,000 on bid with an excess of 4.3 thousand favoring bid. So we can see how liquidity has changed at a glance over time as well. So that's all pretty helpful, right? Just getting a sense of how this main chart works, some of the basics. And now we have some of these other interesting areas on the screen, right? Like, what do these lines mean? The red line, the yellow line, the white line, the green line. So what I do is I have the highest price level and the lowest price level for the session, right? So this starts overnight and then it resets at 9:30 a.m. And it gives us a really quick indicator. Are we making new highs? Are we making new lows? So for me, that's really helpful, particularly as the cash session starts, because that gives me a sense of every opening range. Are we breaking away from these opening ranges? I personally like to look at the 20-minute opening range the most. So that's where I'm focused. And so I'll look at this at like 9:50, and then I'll track it from there and see if we have any kind of breakout or breakdown from that opening range. Now the yellow line, this is the point of control. This is basically where the most volume has transacted. And this also gets reset at 9:30. So you'll have a reset for the cash session to see where that point of control gets created by buyers versus sellers. This white line is the volume weighted average price, and that also gets reset at the cash session open. So we get all these indicators kind of optimized to track where we are from the cash session open at 9:30 a.m. Eastern. So that explains what these lines are. Now, what are these indicators that we're seeing? Well, the ones that look like diamonds are icebergs. The ones that look like circles are stops, okay? And I've color-coded these so that they give you a sense as to what is actually happening. So this is a sell-side iceberg. This is 181 contracts being sold in ES, passive selling. Just like this 206 is 206 longs that got stopped out, long contracts that got stopped out, right? So that gives you a sense with the color and the size as to what all is happening there. So I'm going to take a brief pause. I'll be right back, and then I'm going to start to answer your questions, and then we'll go through some of the subchart indicators. All right, folks, I'm back. I realize there's another area on the main chart that I wanted to cover real quick, and that is the bubbles, right? These bubbles get a lot of questions. Folks are like, how do I read this? What does it mean? I get it. It is different than a candlestick or a line chart or a bar chart or any of that kind of stuff. So what do the bubbles mean? They are delta bubbles. So what they're showing you in red is an excess of sellers versus buyers. The larger the red bubble, the greater the excess or aggression by sellers, and vice versa for green. The way I have mine set up, green bubbles are delta prints of buyers exceeding sellers. The larger the bubble, the more aggressive that buying. So I hope that helps for everything you see on the main screen right now. If other things pop up as the trading day goes, and we've got about 9 minutes away from the open, I'll talk about those as well. Let's now move on to the subchart here. The subchart shows us several different lines, and they are actually largely matching up with what you'll see on the radials here, right? On the lower right-hand corner. So the purple or green line, depending on the cumulative volume delta, is showing you really where things are going. If that line is moving lower, it means you're seeing more selling. If that line is moving higher, it means you're seeing more buying. If it's purple, that's an excess of sellers versus buyers. If it's green, that's an excess of buyers versus sellers. So it gives you kind of an idea of where we are in the auction. Like many of the other indicators on screen, it resets at the cash open at 9:30 a.m., right? So it gives us kind of a running view of where there's participation in the market, which side might be showing a little bit more determination. The white line here, I actually have this set up with the market pulse indicator for volume pressure. So even though the radial says liquidity differential, what I'm really tracking down here is the absolute delta of volume pressure imbalance. So when you see big sells, you're going to see this pop down, right? And it kind of gives you a sense as to when that pressure is being relieved as well on like a scalping time frame. Just like when you see big buys, you'll see it pop higher. For me, it just gives me a sense as to very near-term pressure. And I can see it on this radial up top, this market pulse indicator that Bookmap put out, I think over the last year and a half or so. It's really cool. It also gives you an auditory indicator that you can set up. And I like to kind of increase the threshold on these things so that they only really are giving me an indication that something going on when it's bigger, right? When it's a unusually sized move. Now we also have stops. That's this red line on the subchart. And you can see it in the radial here, second from the right. The stops are showing you what rhythmic data is detecting as being stops. And if it's negative, it's sell side stops in excess of buy, and vice versa. If it's positive, it's buy side stops in excess of selling. So the stops indicator gives you a sense as to where there may be stop runs or where, you know, these more price sensitive momentum traders are getting stopped out. I like to use the stops indicator in conjunction with Icebergs. That's where I find it adds a lot more value. So for me, when I'm looking at that stops indicator, what I'm really trying to see is, okay, but are the institutions that are passive buyers or sellers going the other way and absorbing some of that? So the Icebergs indicator is to the left of stops. It's this radial right here. It's also the light blue line on the subchart. And what I find to be interesting is if there's like an exhaustive stop run, let's say S&P goes down 10 or 12 points, you get these big red delta bubbles, you get 1,000 plus stopped out, but then you see these passive buyers starting to come in, throwing thousands of iceberg buys into ES. That to me tends to be a potential sign of a reversal. So I like to very closely watch price action from there and potentially start building into a position that goes along with those passive buyers, right? So that's one example. And you can flip it the other way. You could have an exhaustive buy side stop run, and you could have icebergs selling into that aggressively. And again, I'm looking for size, right? I'm looking for 4 digits on both sides of these working against each other. So if there's an exhaustive buy stop out, I'd be looking for 1,000 plus buy stops with 1,000 plus iceberg lots selling into that, and then a reversal in price to give me some sense that this is correct. This is a trade I can potentially take on a scalp time frame. The icebergs and stops indicators, they really only track the visible range of the chart. So I tend to be in about a 30-minute time frame. That way I get a sense as to kind of what's happening during that time frame. So I don't do it cumulatively for the entire session. It's really just for that time frame. And then liquidity differential is showing you the order book liquidity differential for all of the participants in the order book. And it gives me just a sense as to where there's, you know, some potential for one side getting really aggressive. So if liquidity differential gets over 20% positive or negative, that gives me a sense that, yeah, one party is getting really aggressive here, probably best to get out of the way, as we could see a reversal, right? So that's kind of everything you see on the chart. Now I'm going to go through some of the questions you all have. Can we see a more zoomed out view, please? Sure. Here is a more zoomed out view. You can see there's not a lot of order book participation too far away from spot, right? Once you get about 1% away from spot, there's really not much going on. How do you zoom in and out, I'm asked? So if you want to zoom in and out on price, you can basically go anywhere over here on the right bars. You'll see your mouse gets this sort of triangle facing down to a line icon. Just take your left button, hold it down, and drag the mouse up and down, and you can zoom in and out, right? Just like if you want to change time, you get that same sort of icon, but it's this triangular icon facing towards the right to a line. That allows you to zoom in and out of your time frame. Okay, so that's 2 ways you can easily change your view on Bookmap. And I change my view pretty often, so it's something you'll probably want to get a handle of if you're running it on your own. And what are the gauges on the bottom right representing? CVD, liquidity differential. Okay, so we went through these a little bit, but I'll just quickly recap. We're about 2 minutes away from trading starting. So CVD is a cumulative volume delta. It shows you the cumulative volume over the session. So I have a reset overnight. So it resets at like 6 p.m. and then it resets again at the start of the cash session at 9:30 a.m. Okay, so it basically is showing you what the excess is of buyers or sellers. If it's in purple, it's sellers. You can see that in the negative radial on CVD on the far right side. It's negative 2070, 2069 right now. As long as it's in the negative, it's going to be purple. Just like if it goes into the positive, it's going to turn green. And that just gives you a sense of kind of which party is being a little more aggressive in the cumulative auction, right? And then what is liquidity differential? It's really just the total order book and whether there's an excess of bids or offers. So that's what that liquidity differential is. And I am factoring for the size of the orders as well. Okay, so it's sort of like a delta of total order size of buyers or sellers. So let me know if that's helpful. And let me know if you all have any other questions. We are just about 1 minute away from the trading session starting here. Less than a minute away from the opening bell. How do I look for a catalyst, positive or negative news, or anything that can move the price of the security I am looking at? So in terms of catalysts, you know, I don't necessarily focus my trading on very short-term
looking out for the
catalysts.
market on open imbalance.
I'm really looking for longer-term catalysts. So, you know, because for me, catalysts are more of an element for swing trades and at least multi-day trades, right? The intraday trades, the problem with trading catalysts there is you're trading against high-frequency trading programs that can run circles around us. Now, doesn't mean they're always right in how they're reacting. In fact, oftentimes they're wrong and their handlers have to come in and kind of like undo whatever positioning they took. But I'm more of a long-term catalyst guy, if that makes sense. And so for me, I like to have a catalyst that's either a micro catalyst, like a fundamental driven catalyst, or a macro catalyst, like a big picture cycle driven catalyst. And then I like to have the price action kind of agree with that. Like maybe I see, for example, earlier this year that there was a big opportunity in utilities, right? And we start to see the reversal in price action. We start to see some of the demand. It's very under allocated. One of the reasons I got long was I saw it's an under-allocated sector. It's poised for enormous growth in the years ahead, and it's completely hated by investors, and yet we're starting to see price action turn around. So that was one of the reasons I started getting interested in XLU and Dominion as long trades. Another example would be looking at oil late last year. It was extremely hated, and yet you look towards the future and you can see, you know, there's a lot of opportunities in the space. Energy companies are objectively cheap. And so I look for an opportunity. I look for crude oil and energy stocks to start showing signs of bottoming and reversing. I had my macro thesis and I started buying in on that basis. So for me, I look for longer term catalysts and price actions that confirm that I might be onto something with that catalyst. So let me know if that's helpful for that question. We do see just a little bit of selling pressure at the open, nothing too significant. We also saw a large resting offer appear above us here, just at about 53.39. And that resting bid below increasing as well at just about 53.11. Now, I will say the overall intraday ranges for trading have been kind of compressed lately. We've had these pretty small opening ranges, and that's been an overall theme that has carried on for over 2 weeks, and it makes it a little bit less exciting when you have a day trading session where your S&P opening range is, say, 10 or 12 points. It generally portends to a session that's not going to be too volatile. How does price move pre and after hours if limit orders are the only orders you can use after hours and market buy and sells are the only orders that move the market? I would disagree with the contextualization of that. Limit orders absolutely move the market. So do icebergs. So like if you've ever traded pre or post, and I'm not going to recommend that anyone does, because if you don't know what you're doing in those thinner markets, you can get absolutely killed. But if you've ever traded pre or post markets for single stocks, you're going to notice that if you put an order in of size, the book runs away from you. That's moving the market, and as is chasing, right? So let's say you're trading post and you're trying to get into some stock that's starting to have a move higher, and you put your limit order in on the bid, and the offer just jumps away from you, right? And so you keep raising your bid, and the offer keeps jumping until you finally get filled. You just move the market with limit orders, right? You moved it by chasing, and you moved it by getting filled, and then that price prints, and that is the new price for the after hours session. So yeah, the limit orders can absolutely move markets, whether it's regular trading hours or after hours, when they're of size, right? And the other side of it is you could have iceberg orders. Let's say you're going in after hours and you want to hide your size so you don't chase the book. Well, eventually other participants in algos are going to get the sense of how large your iceberg is when you keep transacting. Let's say you like restrict it to, 200 shares on a lot for an iceberg, right? And you've got to do like 20 lots or 4,000 shares. Well, after you've transacted enough shares, if it's not a super liquid security, you're going to see that order book starting to run away from your bid as well. And so I would say that, transacting pre and post market is not for folks that don't know exactly what they're doing. But if you do, just be aware it's a very thin order book, and you tend to move price more with less volume. That's one of the reasons that these earnings reports also have such a big impact on the after hours price. You'll notice just like before CPI comes out and the S&P goes like dark and there's like no liquidity there, so you get this wild price movement. It's the same thing that happens after hours with these stocks, or pre-market with these stocks around earnings. The order book liquidity dries up and you get erratic price action. It takes less volume to move the price even more until that liquidity comes back. So I'd say, whatever kind of order that you're using, you have the potential to move price if there's size there. And it's all relative based on the total liquidity in the order book. So let me know if that's a helpful answer. I know there's a lot in there, but there's, it's nuanced. And so we are seeing some more resting liquidity appearing above us here. I've got some more orders coming in on the offer side, about 717 now in these two contracts combined. Now that's probably going to act a bit like a magnet, particularly as we have this buy program that's open still. 192 ES contracts bought. So you can see the iceberg buy indicator down here. Bookmap was able to detect through that stops and icebergs program that buy started here, and it's still in progress. So that puts a little bit of a demand right here, right at VWAP, pretty key area. We're starting to climb above the point of control, and then we've got this offer overhead. So obviously someone wants to transact here and take some of that S&P futures off their book or enter a short around this position. So that if we're just looking at this from pure auction theory, we know there's demand below us, and that demand hasn't been fully satisfied, and we know that there's this appetite for higher price here, so we could get a bit of a push higher into that resting liquidity. So we'll take a look at how we transact this. The biggest thing also is if we come down here back to where that buy program started, how much more is left? How much depth is there in that demand? We also see something else on the subchart here. Icebergs steadily building, passive buying, a theme from the cash open. And so far, we've had basically a 3-handle opening range. We'll see what happens over the next 12 minutes as we build that 20-minute opening range. But so far, not a lot of volatility in this market, and kind of makes sense. Order book liquidity is healthy. Got about 58,000 order book depth when you add up these limit offers and bids, and that's a decent sized order book. The other thing that you can see is that we're in positive gamma territory, which also tends to compress vol. Now you see these icebergs, they are continuing to come in here at the bottom of this point of control. You just continue to see buyers coming in and showing interest down there. So let's see if that continues. But overall, it looks like there is interest in price just around 53.26 and lower at 53.25, where that first buy program was started. And that passive buying, that iceberging, continues to build. One theme that I've seen over the last week are these unusually sized sweeps in Pinduoduo. It's a Chinese company. Just saw another one, 160,000 in premium paid for the 170 calls in June 21st. Yesterday there was an excess of 2 million in premium paid for these. So someone's getting really bullish on this Chinese company. I just thought I'd quickly just mention that as it's all coming through my my option scans here. And there's not a lot to see in ES here as it just sort of consolidates. So you know what we're going to do? We're going to look around some other contracts here, and then we'll get back to ES. NASDAQ showing just a little bit more volatility than ES. It had this big bounce, some selling pressure into that, but you also see there was just a little bit of passive buying. The NASDAQ Icebergs count also showing that passive accumulation over the last 30 minutes or so. Stops showing the opposite too. Some of the smaller traders, some of those longs getting stopped out on that downward move. So that is interesting. We'll see if that ends up showing us any signs of reversal to the upside, but so far it's testing VWAP and holding. The Russell, pretty narrow trading range for this one from the start as well, a lot like the S&P. Not a whole lot here to see, not a lot of conviction behind the buying or selling on this contract. Crude, maybe just a little bit more exciting here. Let's zoom out for context here from the overnight session. It's been pretty choppy, but you did see a decent bid come in here around 8:25 a.m. and from there we've been pushing higher. You also saw this active buying program coming in, these icebergs, 108 executed down here, just showing us that there was some interest in price around 78, and we've been pushing higher from there. Now we're just starting to see a little bit of passive selling, and you can see that on the subchart. Icebergs starting to fall off as the cumulative volume delta gets into positive territory. So folks that were buying a little bit cheaper, probably offloading here after making about 0.5% on crude, but overall it's looking reasonably constructive. Just will be interesting to see what happens if these passive sellers continue overhead here, because that would be a bit of a change of character from what we had seen earlier. Natural gas, this one's been so fun to follow. I talked about in early April, I thought it was bottoming, and you know, it's up over 60% from there. Seasonality supports this. We also see that just the positioning got pretty lopsided to the short side for a bit on this one. So natural gas is looking pretty constructive overall, though I wouldn't be too surprised to see it take a breather. And today so far, it is down just close to 2%. Gold, another one that's having a bit of pullback today, although it's off of its earlier lows and starting to look a little bit more constructive. But gold down just about 0.2% here, trading around 24.31. And the precious metals, it wouldn't be terribly surprising to see them take a breather here. They've had such a tremendous run that it would actually make sense. But if we pull this back, we can see there has been a bid from the European session lows in gold that we're up about 15, 16 bucks from there. Let's take a look at silver. Silver has been incredible. I think that silver is in a powerful new bull market. It's broken above its recent highs. It's now making 11-year highs over the last several days. And it's got a lot of catching up to do with gold. I wouldn't be terribly surprised if silver actually makes a new all-time high this year, which would be in excess of $48 an ounce, telling you it could still run quite a bit. But in the near term, a little bit of a pause would not be unhealthy. Similar with copper here, it is up again today. It was down earlier this morning. Now it's up about 1%. This is a metal where things have gotten just a little bit out of hand in the near term, but I'm very constructive on it over the intermediate term. And what I mean is the premiums for COMEX copper are significantly higher than that in LME or Shanghai. We're in deep backwardation and positioning has gotten blown out to the long side. So it would suggest a pause would be healthy. We do see sellers getting just a little bit more aggressive here. These are those larger red delta bubbles, just suggesting that there is some more aggressive distribution happening in the near term. And platinum is another one that's had an incredible run. And similar to copper, it has a structural deficit. There's not enough supply, but it's also had such an incredible run that I would be just a little bit concerned about near term. Now, intermediate term, I'm still very bullish on platinum. Now, I've been asked to take a look at Eli Lilly, so we'll do that. We'll just get through a couple other things first. Here's the 10-year note futures. And unlike yesterday, today we're actually getting a bit of a bid in these. Nothing too tremendous, but you can see that off their lows, we are actually starting to see a little bit of a resumption here. In that, we are seeing a fair amount of passive selling, though. You can see this 3,500 block of Icebergs, this 1,500 block of Icebergs. So some degree of selling into this strength, which these same folks were buying, should pretty much bottom ticking it here with this 2,000 Iceberg order buy. They've more than taken all that off, and now, just based on Iceberg flow, have gone net short. And we're looking at the euro on screen, which is basically the anti-dollar. Our exhaustion indicator that I built recently showed an exhaustive print. We have seen a little bit of buying from there. So far, though, the dollar today is about flat. And I've just added Bitcoin onto my screen. And this one is one that I'm tracking. It's very interesting how much strength we're seeing in crypto right now, particularly just given that we're not seeing it in some of the other proxies for excess liquidity quite as much. But crypto definitely making a powerful run here. It is something to keep an eye on for risk appetite. We're within scratching distance of all-time highs. And Ethereum really leading the way here as we hear more and more interest in a potential Ethereum ETF. And it could actually be something that comes into existence later this year. Taking a quick look at Apple. Apple's got a constructive bid. We saw some exhaustive selling down here. We've got a constructive bid here going into this resting liquidity at 192. So that's a bit like a magnet. But if we do reject it significantly, that tells you that buyers don't have the demand to pull us through there. So when I'm trading resting liquidity on the book, I don't trade all the way to that level. So if I was trading Apple and I was getting long here at this exhaustion, I would take my order to like 191.95, right? That way I'm just far enough away that if we get that kind of rejection, I still get filled and I'm ready to go into another trade rather than hoping for that extra 5 cents. That gives me the opportunity to trade a little bit more off of these levels. Okay. So let's add Eli Lilly here. It's pretty easy to add something into Bookmap, right? You just find the symbol. If you want historical data, which I always do because it gives you a little more context, you just throw it in there. And I'll just sort of alphabetize it, clean up the chart just a little bit as I need to. And you can see Eli Lilly having a bit of a pop here. I believe yesterday it didn't have the best day because of some of that news that was coming out from Hims and the weight loss drugs that... But yeah, it looks like it sold off a bit yesterday. Now we're getting this big pop. It's up 5.26%. And it looks like there was a press release. More than one half of patients treated with Crohn's disease, or one half of patients with Crohn's disease treated with Lilly's new drug achieved clinical remission at 1 year, including patients with previous failures on biologics. So that news is outside of Lilly's weight loss drugs. This is a new potential patented product pipeline that looks pretty constructive for the company, and that's one of the reasons it's getting a bid. So hopefully that helps to contextualize what we're seeing there. So how does price move in any session, whether it's normal hours or after hours? It's always a three-way auction. It's always a difference between excess of supply, excess of demand, or a balance of the two, right? So whether price is moving during the regular trading session or after hours or pre-market, it's all about demand and supply. And whether it's limit orders being used or market orders, that's what's going to set price. That's the most important thing to consider. Can we look at BABA? Yeah, absolutely. We're also about 1 minute away from the 20-minute opening range on S&P. So I'll pull BABA on screen. And I'm just going to clean up the chart a little bit here. And I have asked the folks at Bookmap to make the subchart save the settings like the main chart, so that in the future, hopefully, there'll be a little less of that when you add a new symbol. Just be automatically your preferences. But nevertheless, here is BABA on screen. This thing has had a nice run overall after its post-earnings lows. And it is continuing that run this week, although today pulling back a little bit, down just about, well, just over 1%, about 1.5%.
Trade BABA at DX feed by price 86.8, size 2043.0.
And of course, I'm going to turn that off. That's one of the things that I was hoping, as we kind of customize things, we can have all the settings replicate. So that won't be coming back on there, but you can set those trade alerts if you want them. They can be helpful if you're tracking moves in a particular security. So we have formed that 20-minute opening range. We'll talk about that in just a moment, but let's zoom out on BABA. We can see overhead there's a large area of offered shares up here around 88.25. We've got 86 as a large area of bid for shares on BABA, and we've got a bit of an opening range on this one. It's about $1 wide, right? The point of control at 86.40. So far, it looks reasonably constructive off of its lows, and liquidity has come back in. This thing is trading with pretty significant liquidity, so I'd say, we've retested sort of those pre-market highs. So now it's really going to be the onus of proof is going to be on the buyers to show that they can keep that momentum going, that we can keep moving higher in BABA. But overall, I'd be looking for this thing to pull back a little bit. I'd be looking for it to pull back to like 84.54 before I get more interested in wanting to add to that positioning, because it's just had such a big pop and volume is starting to drop off that I think it would make sense for it to consolidate a little more. So that's kind of where I'd look at it over the next couple days. Maybe it starts to come down to these larger levels of offered liquidity. And you can see there's 84. That's a pretty large level, as is 85, 86. And today could just be a day of sort of consolidating those prior gains and moving lower a little bit. That's kind of what I would be thinking about for BABA. I don't have a really strong feel in it, as it's not a stock that I track regularly, but just looking at the longer term chart, it looks like it has some room to consolidate if this move is like what kind of led to it. So let's look at the S&P 500 here. We have a very uninspiring opening range. It's about 6.5 handles. which gives you a sense that this is probably going to be a kind of boring trading day unless there's some outsized catalysts that come in. We do have a lot of Fed speakers today. We've already had 4, believe it or not. Yeah, we've already had 4. We had Waller, Barkin, Williams, Bostic, and Barr. Barr's coming up at 11:45. Then we've got the Bank of England's Bailey at 1. And then Fed's Collins, Mester, and Bostic, they all speak at 7 p.m. Someone says, I've heard small caps can affect ES movements. So I think what you're really seeing, honestly, is that rates can affect ES movements. Because the Russell really keys off the price of the 10-year note. And the context for that is that about 40% of the Russell doesn't make any money, so it's very rate sensitive. Then you've got the regionals. They make money mostly, but they've got a lot of exposure in their loan books and in their assets to duration, right? And so that's in the form of like agency mortgage-backed securities, mortgages they originate, 10-year notes, and other kinds of securities that vary with like their market price varies with rates. And so they also take pressure on rates rising. And so the Russell often trades inverse to the 10-year note rate and very correlated with the 10-year note price. In fact, if you take a 10-year note price and track the Russell with it over a 20 trading day period, it's got about a 0.93 rolling correlation. So why to go through all that for the Russell? Because what you're really seeing is the Russell acting as a proxy for rates, which it gives you a better idea of what's moving the S&P. The S&P doesn't have the same level of correlation with 10-year rates, but it's quite strong. It's like 0.8 or 0.85 over a 20-day rolling period, similar with the NASDAQ. So the story is more one of rates moving everything than the Russell moving the S&P. Let me know if that helps. Been asked, what Canadian brokers would I recommend? I'll be honest, I don't really know any brokers in Canada. I'm here in the US, so I can't say I'm super familiar with the companies over there. I can say in terms of international brokers that I think have a presence in Canada, Interactive Brokers is likely one to consider. They have pretty darn good clearing, particularly on their non-free accounts. And they've got all kinds of different instruments that one can trade, whether it's futures, Forex, stocks, options, bonds, commodities, you name it. So that would be one that I'd probably take a look at there. Got about 5 minutes left for the Bookmap stream here, folks. If you have any questions for me about anything that I've presented or anything else that's on your mind, let me know. I'm going to take a quick pause. I'll be right back. All right, folks, I'm back. Just got about 3 minutes left on the stream, so we're going to take a quick look at the S&P options activity we see with the advanced SPX options visualizer, now available on the Bookmap marketplace. We can see the activity in the most active put contract. That is the hot put here, trading at about 53.1325 in ES, adjusted from SPX levels. And that is the most active contract on the chain. You can see that with the plus next to the volume. But that also tells you the plus, the lack of an asterisk, that calls in total are still outpacing puts in terms of transactional activity. Otherwise, there'd be an asterisk there. So this gives you a sense of exactly where there's options interest during the trading day. We also see the midpoint lining up with price and the point of control. This is the balance area between the most active calls and puts, right? So it ends up being a pretty important place, particularly where there's convergence with other things like the point of control and VWAP. So I want to thank everyone for tuning in. If you'd like to learn more about my work at TraderAid.com, visit TraderAid.com. For a limited time, you get up to 20% off using the code Mayhem20, Mayhem20 at checkout on your first month or quarter. We've got an amazing community, a lot of awesome tools, including this advanced SPX options visualizer and a customized Discord bot. You can also get up to 40% off of Bookmap. And if you aren't using Bookmap for your trading, it can help to level you up. Visit TraderAid.com/bookmap. That's TraderAid.com/bookmap to learn more. Scroll down to the specials. And if you'd like to check out the advanced SPX options visualizer, it's available on the Bookmap marketplace. Right now, I've got lifetime plans for a limited amount of time. And just visit TraderAid.com/SPX to learn more. Finally, if you're interested in longer-term investing strategy, institutional consulting, and other resources, visit Macrovisor.com. I want to thank everyone for tuning in. I'm going to keep this going, but I am going to close down the component on the Bookmap Discord and YouTube as they have some other presentations to go through, and I highly recommend checking out all their content. The folks over at Bookmap are awesome. So thank you everyone for tuning in. Really appreciate it. We're going to keep this stream going on my YouTube, Twitter, and we're going to switch it over to the TraderAid Discord.